Thank you, and welcome back to the Briefcase, where we talk all things business, investing, and real estate. Today we'll be talking about residential versus commercial real estate, and which actually makes more money. Let's get into this. Everyone says commercial real estate is where the real money is, but is that actually true? Because when you look past the surface, the numbers, the risks, and the way deals are actually structured, it's not nearly as obvious as people make it sound. So today we're breaking it down properly. If you've spent more than 5 minutes in real estate circles, you've probably heard this. Start in residential, but scale into commercial. It sounds logical. It sounds sophisticated. It also sounds like something everyone repeats without actually explaining. So let's do something different. We're going to compare residential and commercial real estate the way a CPA and an investor would. Not hype, not opinions, just how the money actually works. Now let's get into it. First, let's start by defining the two. Let's start simple, because confusion here leads to bad decisions later. Residential real estate is anything with 1 to 4 units, single family homes, duplexes, triplexes, and fourplexes. Once you've hit 5 units or more, you've officially crossed into commercial territory. But commercial isn't just apartments. It includes office buildings, retail centers, industrial warehouses, and self-storage facilities. So when people say commercial makes more money, they're comparing a house to an entire income-producing system. That distinction matters more than most people realize. Next, let's talk about the income potential. Let's address the question everyone actually cares about. Which one makes more money? On paper, commercial real estate usually wins. Why? Because income scales differently. In residential, income grows linearly. 1 unit equals 1 rent check. So if you want more income, you need more properties, more tenants, and more management. In commercial, income scales more concentrated. One property can generate $20,000 a month, $50,000 a month, and sometimes far more. And here's where it gets interesting. Commercial leases are typically longer. We're talking 3, 5, 10 years. That means predictable income, less turnover, and fewer leasing headaches. But here's the part nobody emphasizes enough. Commercial can produce more income per deal, but demands more capital, more expertise, and more precision. This isn't just bigger, it's less forgiving. Next, let's talk about the risk comparison. This usually determines whether you keep the money or you lose it all. Risk. In residential, risk is distributed. If you own a 10-unit apartment building and one tenant leaves, you've only lost 10% of your income. Annoying? Yes. Catastrophic? No. Now compare that to commercial. Let's say you own one retail building with one major tenant. If they leave, you don't lose 10%, you lose 100%. That's what you call binary risk. You're either fully occupied or you're not making money. And here's where it gets even more nuanced. Residential demand is constant. People always need housing. Commercial demand is economic. It depends on business health, consumer spending, and market cycles. That's why you always see fully occupied apartment complexes sitting right next to empty retail plazas. Same city, completely different outcomes. Next, let's talk about the financing differences. This is how you actually buy these properties, because this is where most people hit a wall. Residential financing is based on you, your income, your credit score, and your debt-to-income ratio. That's why people can buy residential properties with low down payments, conventional loans, and FHA loans. It's accessible, while commercial financing is based on the deal. Lenders care about net operating income, debt service coverage ratio, and tenant stability. In other words, residential asks, can you afford this? Commercial asks, can this property sustain itself? It's a completely different mindset. And yes, it's more complex. Now we'll move on to management intensity. This is something that won't show up on the spreadsheets. This is the headaches part of the business. Residential real estate is more tenants, more turnover, more maintenance. You're dealing with leaks, late payments, and emotional decisions. In commercial, it's different. Fewer tenants, more professional relationships, and in many cases, you'll see triple net leases. That means the tenant pays property taxes, insurance, and maintenance, which sounds amazing, because it is. But remember, you're trading operational complexity for financial concentration risk, less work, and higher stakes. Now we'll go into the returns between residential and commercial. These ranges are, for residential, it's 6% to 12%. In commercial, it's 8% to 15%. At first glance, commercial wins again, but here's the nuance. These returns are market dependent, deal dependent, and scale dependent. A well-run residential portfolio can outperform a poorly structured commercial deal every single time. And I've seen it happen more often than people admit, because commercial doesn't reward effort. It rewards precision. Now, we'll get into what you should choose. So, what should you actually invest in? Should you invest in residential? Or should you invest in commercial? Or should you invest in both? Now remember, both have their aspects. Both have their pros and their cons. Let's get into residential. Residential is better if you're a beginner or you have limited capital. You want a simpler entry point, or you're learning the fundamentals. This is your training ground in real estate. And then commercial, this is better for if you understand the deal structure, if you have access to capital, if you can analyze risk properly, and if you're thinking at scale. This is where you start building systems, not just properties. So, will you choose residential or will you choose commercial? This is your choice. Or you can do both. It is a long journey. Start it when you can. Now, here's a fun fact that might completely change how you invest in real estate. Did you know that one commercial property can sometimes outperform 10 and even 20 residential properties in total income? That sounds crazy, right? Well, here's why. Commercial leases are usually much longer. We're talking 5, 10, even 20-year leases, compared to residential tenants who might stay just a year or two. That means fewer vacancies and more predictable cash flow, and way less turnover stress. But here's the twist. Even though commercial properties can bring in more total per deal, most millionaires in real estate actually started with residential. You know why? This is because it's easier to get into. This requires less capital upfront, and banks are willing to lend on a house way more times than a retail plaza or an office building. So while commercial might win on scale, residential often wins on accessibility, which is why so many investors build their foundations from residential. Pretty interesting, right? Thank you for watching, and if you found those facts about residential or commercial real estate confusing or insightful, please comment down below. And if you enjoyed this video, please like and subscribe. And now remember, stay smart.